Sakshi.
Absolutely. Time to then welcome our guest on board with us. Mr. Sunil Subramaniam, market veteran, is now joining in on this special broadcast. Warm welcome to you, Mr. Subramaniam. Here's wishing you heartiest wishes for Diwali and the upcoming new year as well, to you, to your family members, to all your loved ones at large as well. Tell us, what is it that you picked up as one of the key lessons from Samvat 2080 as an investor, and what is the new approach that you will have for Samvat 2081?
In this year, the learning has been to smell the money. So I think, for years I've been a fundamental investor, a value-based investor, trying to look at future cash flows, the fundamental businesses. But what has the market taught us is, the पैसे वाले जो करते हैं, उसको समझो, and then you act accordingly. Because in the short run, money dominates. In the long run, maybe fundamentals and earnings will dominate. But if you are then to have a smooth journey, you can't say, I feel it, shut it, forget it, right? You have to take care of the short term also. So I think smelling the money, understanding where the flows are coming from, what are they likely to buy, what is the thought process, that I think has been the biggest takeaway in the current year.
Right. Namaste, Sunil ji. Festive greetings. We've always been blessed by your presence, your wisdom, and of course your foresight on the long side. Some of the best performing mutual funds were under your tutelage over the last 15 years at Sundaram AMC, and we hope that this is not something that you will give up in exchange of momentum, and as there is quick commerce, there is quick trading as well. But money in the long term has been made only by buying quality stocks, and this is something that we have learned from you. Now tell our viewers, how do you see the structure of the market with this October turning out to be one of the most disastrous months that I can remember? About 10.5% cut on the small cap index, 8 percentage point cut on the Nifty. Do you see this sell-off continuing in November, or is the worst behind us?
No, I don't think the worst is behind us, because I think the US election uncertainty will persist well into November. I think the result either way would not be, market would have to take time to react to. So I'm saying that emerging markets will be starved of capital in the coming month, because US treasuries being where they are, with a strengthening dollar, and FIIs sitting in the US would have a very, very tough decision to put money outside when he's making risk-free money without risk of capital erosion due to currency. If he steps it out into the emerging market field, he has to take care of both the things that he's losing up on the opportunity cost of that yield. So I would say, because of the elections, it's going to continue to be a volatile period for overall emerging market equities, and India, notably, for India, two things add to the confusion. The first is the fact that with geopolitical tensions, oil is always on the tenterhooks. One day Israel strikes, they spared the oil fields, oil recovers. Another day they say US supplies, inventory is down to record low, oil rises. So in a winter period, for a hugely 85% of our oil requirement is imported, our economy and hence the markets are unduly sensitive at this point in time. That's the second point. And the third point is that Diwali happens to have come at the end of October. So this festival season number is not out in the open today very clearly. What we have seen companies talk about is how September went and a broad guidance. So people are stocking up the shops like the auto companies, but whether they are getting sold will be known only when the data come out in November, and these earnings will be known only in January. So domestically also there is uncertainty on what, and mind you, this is a very crucial quarter. Why? This is the quarter in which the market shifts focus to FY26 from FY25. So they're looking for guidance, they're looking for triggers, they're looking for where is that, but that trigger is, I think, not comforting enough at present based on the earnings that come. So market will take. So I would expect this period of volatility to sustain. And finally, I wouldn't call it the nail on the coffin. This is also the period when short-term hedge funds have to book cash profits to receive their bonuses, right? They can't go on their December vacation without having booked that cash profit. So they have to sell. Now what happens? Some people say, oh, I know my friend is going to sell in December, so I will sell in November. Everybody tries to be one ahead, a one-upmanship comes to play. So we are in for a fairly volatile period, and then US has been so confusing, right? You had Fed talking about a big out of turn 50 basis rate cut, market factored in 100 basis points. Suddenly the labor data, this data comes strong, and you are reversing the stand. So all in all, I think this is a period where it's good to be a spectator in the market, buy a 500, whatever, for the concert that's going up, Coldplay concert, sit on the sidelines, watch the market, be very careful about your money now. But once this period is over, right, I think all of these things will come to an end by the end of by the October, December quarter. So I think that's where I would say this is the time to be cautious, a time to be a little bit contrarian, if I may say, because the sectors which have disappointed the most are the ones which have in the long run the best outlook. So to be a contrarian and say something hasn't done well this quarter, but I still buy, I think something will pay you dividends because you are going against the market, contra thinking. That would be helpful in this period, according to me.
That's right.
Sakshi, we have the ultimate insider of mutual funds now with us, who's very keen to divulge these details. कब fund manager बेचते हैं, क्यों बेचते हैं, किसका bonus आने वाला है, and what you can do from now on. Sunil ji, I am really looking forward to all these conversations with you. Now that you are relieved with a lot of corporate responsibilities, and you can come up with thoughts of practical brilliance that can help our viewers to make money. The other thing, Sakshi and Sunil ji, I wanted to point out was, if you remember last Friday night, we had the Israeli attack on Iran. My feeling is that the markets are lightening up ahead of the weekend. In any case, we had this end of account situations and so on and so forth, and of course tomorrow is Muhurat trade, so people will not be having an opportunity to sell tomorrow because the timeline of the trade is less. So this could possibly be one reason that they are fearing that Iran might retaliate. These things happen on the weekend only. Once they shut down Wall Street, और फिर मुसीबत हमारी आती है. But that's how life has worked over the last so many decades. So probably this is one of the reasons why we see weakness today. But 24,200 should hold on the Nifty, or at least I am hoping that way. Now Sunil ji, comes the most critical part of the market. Of course, tomorrow we will also be seeing Muhurat trade and auto sales. They have been very tepid, and these stocks have been thrashed beyond recognition. Bajaj Auto, top loser. Hero Motors is down about 25-30% in October alone. What would be your thought process of about buying this dip in the auto space? Does it make sense, or you feel prices will correct more?
No, I don't think it's a time to buy on the rumor and sell on the fact. See, there's a rumor around. Effectively, it's an expectation that auto sales are not happening because you're hearing about stocks piling up in the inventory and a lot of things. But let's wait for the results, because the markets have factored in a lot, and hence if those Diwali numbers turn out to be disappointing, there could be further correction on the way. So I would say another phrase to use: fools rush in where angels fear to tread. So I don't think it's the right time in the midway through a data analytical process where the data is not fully with you. You don't take calls on interest rate sensitive cyclical sectors because they go sharply up or sharply down.
Sunil sir, we'll focus on HDFC Bank. There are two reasons why I will point this out. One, we have started to see some buying happen on HDFC Bank in the last few weeks or sessions after those 3 or 4 years of underperformance. Earnings have been well as well, and now there is this news that HDFC Bank's non-banking lending unit, HDB Financial Services, has filed for an IPO worth 12,500 crores, and HDFC Bank here is the largest shareholder, 94.6% stake, which will sell shares up to 10,000 crores, and a fresh issue of about 2,500 crores will be up as well. Of course, we'll be looking at this probably next year, before the time that we are right now in, probably maybe August or September. How are you really looking at this opportunity, because this is going to be the first float in 6 years from HDFC Bank as well? Your sense of how should one be really looking at this bank now?
No, see, I'm so one of the best professionally run institutions I've seen in my history, right? The merger with the parent led to a lot of different cultures merging, different type of a loan book which they didn't have, the asset liability mismatch happened. And I think because it had been so much part of everyone's portfolio that they had to correct it, because put together they would have been high. So I think the share has been under pressure for non-business reasons. I'm not sure that HDFC Bank business has suffered as much as the share price has suffered, number one. Now, if you're unlocking, see, in any company, there's an embedded value of the subsidiaries that are inherent in it, right? And in attributing the parent, there's always a discount which comes in. So when you start unlocking that value, right, and spinning off and going to the equity markets, you realize the true value of the institution. So I would welcome these kind of a disaggregation of the parent from these things, and it's a good move. And I think that the non-lending institution will have a good future. And I would say that all other things being okay, it should be a positive IPO to look at for.
Okay, let's take a detour into prices. We are at 245. Another 45 minutes left for the markets to end. So we are down 122 on the Nifty, and Nifty is not the only loser. Sakshi, I was just looking at some monthly data, down about 7% so far in October, and this is the worst month since March of 2020, which was the COVID fall. In that month, the Nifty had fallen 23%. So this is how it is, ladies and gentlemen, and this fall in October of 6.3% so far is coming after 4 consecutive monthly gains. So June, the Nifty was up 6.6%, July 3.9%, August 1.1%, and September 2.3%. So October has turned out to be weak. This is now down 6.3%. Let's just look at some volume buzzers in the market that will give you an idea as to where money and price are moving in sync despite a broad weak structure of the market. Children's Hospital Rainbow, this is the top traded counter in terms of volume buzzers on the NSE 500, up 8%, 15 times 5-day average, which is now today 21.77 lakh shares. Grindwell Norton 3% higher, 2215. Cipla 9% higher, 7.8 times the volume. So these are a few stocks. Sakshi marks JWL, which is Jupiter Wagons, 7%, 6% higher, and 4.5 times the 5-day average. In terms of losers, you have AIA Engineering 2% lower on strong volumes, Biocon 2% lower, 1.7% lower on strong volumes, and newly listed Akam Pharma down 7% on 3 times volume. So this is how it is moving, ladies and gentlemen. And of course, in terms of Nifty, it's just L&T and Cipla. Sakshi.
Okay, let's get back to the conversation with Mr. Subramaniam now. Looking forward into the new Samvat, sir, do tell us any key trends, themes or sectors that one should be looking at which could now have their day in the new Samvat, new settings, new macro setup that will develop. What are you really looking at?
The first thing is that the US should go through a period of certainty, because whether Trump or Harris comes to power, their policies would be fairly clear, and the impact of that. So it will be a less of a event-laden year than this year, right? Because the wars have also played their part in the past. So a more certain outlook in the new year for the US markets and economy. The IMF has also indicated a strong growth recovery for the world economy. So I think on that wicket, it's good augurs well for the new year. The second aspect here is the Fed's concern over inflation has eased considerably. So while the initial expectation of the rate cuts at a rapid pace may not take place, I would still argue for a 75 to 100 basis points rate cut spread over the year 2025. So RBI, I don't expect a rate cut in December or even in February, but during the course of the year, definitely a rate cut from RBI to keep pace with SARIR. So you're looking at a year with rate cuts. So when you have rate cuts, one, they're positive for equities. Second is they're positive for financials, right? Especially financials in the US, right? And so if something is positive for financials, then even India also rate cuts will be positive for financials. So that's one pick that I say that for financial. And one of the reasons for that is we talked about this month, but if you go back for a year, the Nifty is up about 25-27% when I last looked at it. The banking index is up only 20%. So it has not performed the last year up to its weight in the index, right? Now, the next year, I expect this to be the leader. And what's the reason for that? First is the rate cut scenario. The second aspect is that India's corporate capex cycle, ultimately next year will pick up. And the consumption, while right now it's not showing very good numbers, next year, I believe, our per capita income has now crossed $2,700 from the 2,200, 300 it was hovering on for some time. So I think that increased personal disposable income will next year translate into a year of consumption. I believe discretionary consumption should take. So both these aspects, the capital cycle and the consumption cycle, need bank financing to go forward, right? That's the new age. So I think banking, and at the same time, the shift from consumption to savings, which is seen in the SIP book of mutual funds, should benefit the stock market related participants, whether they are AMCs or insurance companies or wealth managers or broking houses. So I think BFSI playing both sides of the lending curve is a good play for next year in the context of this. The second segment, and I naturally believe consumption will bounce back away from the recent correction. The second is if the US recovery comes through and then the BFSI is going to be a big beneficiary, then Indian IT sector should benefit because they are the biggest buyers of IT products. So I would keep my overall focus around BFSI as the lead pack, consumption to follow a little bit, IT to be a safety-oriented element in the portfolio for the year 2025.
Sir, what is your view on the bright spark that we are seeing in banking earnings, both private as well as public, more so from medium-sized and smaller public sector banks? Do you think we've had enough of a sell-off in PSU banks? Any favorites that you would hear on the long side?
See, to me, the PSU banking pack essentially depends on corporate revival. See, their biggest strength is their rural network, which has huge CASA balances, right? But at the same time, for lending to the MSME sector, they are the leaders and they know that segment very well. So I think MSME sector's lending will pick up only when corporate capital pick up because they are ultimately suppliers, ancillaries to the capital goods and all of that. So for me, to buy a broad set of PSU banks, I would wait for a clarity on the corporate revival happening. But that being said, the larger public sector banks are very well run, efficiencies have improved, the mergers have helped their cause, and they would continue to be a pick. So in going down the cap curve on PSU, I would still wait and watch to see the corporate capex, private corporate capex revival come through. And one of the things that augurs well is that I think because of the election, the government capex had kind of taken the government had taken the foot off the pedal, and that leads to a lot of downstream orders which didn't happen in the current quarter. So I think as government also revives the capex going to the new year, we have a new budget which will allocate more money towards infra and capex for the next year. I believe that there will come a time when a broader PSU bank buying can come in. Not yet. Right now, stick to the top creamy layer of the PSU banks, and at the same time, in the same thing in the private sector banks.
Okay, Suresh, another pocket within the PSUs, the defense and the railways is what I wanted you to focus on. Explain to our viewers what has really changed for these two sectors, which were erstwhile favorites of all traders, investors at large. When they were, at their peak, there was still a lot of confidence among investors. Now they are down 20, 30, some of them 40, 50% also down, and yet the confidence is not returning with the way probably one would have imagined that if they give you an opportunity to take an entry 40% down, then probably it may be the best time to take an entry. But that kind of a confidence has not come back. What do you think has changed in the last 2 to 3 months for these two sectors, and how should one view them now?
So I think that first of all, the run-up happened for two main reasons, right? One was what you call the Modi factor, right? The expectation that the Modi government would reform the PSUs, support them with capital, make sure that the business gets a certificate allocation. There was a lot of optimism and euphoria around that Modi factor on that. Second was the excess liquidity in the market, especially notably from small mutual fund investors giving money in small and mid cap funds. So what happened was, as you saw, there was a value catch-up rally which happened. And PSUs, historically, because it traded at a huge discount to the private sector, naturally there was a lot of money flowing in there, and the story got built and got reinforced, and there was a rapid run-up. What changed? People realized that a single Modi or a government cannot change years of a PSU's existence, right? And the right way to judge the PSUs is in the context of the sector in which the PSUs are. So you have a metal-related PSU, you've got to look at global metal cyclicals where they are going. You have an energy-related PSUs because these two dominate the PSC index also, right? They are again a global cyclical. So I think global factors came and they made them realize that these energy and metals, fat were under thing. Then when the private sector's valuation started coming down, the relative valuation the PSUs had to fall. And what then happened was the smart money, which is the fund manager's money, right? When they got money into a broad pool, when the certain specific mutual funds launched dedicated defense fund, energy fund, that all that money had to go into that pocket, and that's what made those share prices rise. But then once those were deployed, we didn't see any more of the NFOs in that space. The new money coming into diversified funds, fund managers started sector rotation. They looked at where have we made the most money, where is the earnings not really justifying it to the value catch up, and hence they sold off those stocks because when FI started selling, good quality stocks started getting cheaper to buy. So you have to sell something to buy something, right? So those which had run up a lot without a totally fundamental sound logic naturally had to correct. Now, has the correction happened enough to again make them value related picks? No, not yet. So I would say that that's why fund managers are still cautious on buying this strong correction in those stocks. So I would say that until that smart money makes a move towards that. So that is until energy, metals and all of those start looking up and so their values look depressed, you will not see fund managers step in and buy. And when that happens is when you will find that these sectors will again pick up. So at this point in time, I would say you will have to wait and watch. It's a falling knife. It could end up cutting you or whatever, so stay cautious.
Right, this is a very sensible view that is coming in from Sunil ji. He is a veteran of 5 bull and bear markets, at least that I can recall, and there is no point in you trying to catch a falling knife, especially when it goes through you. So let it stabilize, let it sort of maybe rise for a week. A reversal of 1 week on a weekly chart is possibly a good sign of re-entry at bottom levels. 258, we have 32 minutes left for this Samvat, and of course the battle for supremacy between the bulls and the bears is at 24,200. The Nifty 500 is falling lesser than the Nifty. These are signs that you should read. The Nifty small cap index is actually showing some strength as well. It may be in negative territory, but the fall is absolutely minor. Actually, the small cap index is in positive territory, 0.7% higher, 18,512. 61 points, 61 out of 100 shares are in the green. Mid cap has slipped a bit, nothing much to be worried about. But again, it's the overhang of the possibility of a flare up in the Middle East that is driving prices. And one more important data I would like to point out: before the fall of the IT index for today, which is a 2.5 3% fall, IT index was the only index actually that did not fall in the month of October. So this is something that has to be appreciated against the backdrop of very heavy selling pressure, in which the Nifty was down 8%, the small cap index and the mid cap index down about 10.5-11% each. It was the IT index that did not lose even one bit in the last 22-23 sessions of October, and perhaps that is the sign to read, which Sunil ji is pointing out, that the last bastion of strength is slipping on the Nifty. Sakshi.
Okay, got it. Sunil, all right. I think Sunil sir has left, and we will now be welcoming Mr. Amar Singh, Senior Vice President Research at Angel